Hello, this is Bruce Fleet, President of Fleet Capital Management. It is Sunday, September 25th of 2016. I hope you're having a great weekend so far, the beginning of fall. I'd like to say that this video is intended for clients of Fleet Capital Management. If you are not a client of Fleet Capital Management, I hope you enjoy and learn something from the video, but please do not consider any stocks that I talk about today as a recommendation to buy or to sell. We do that on a one-on-one basis, not on a video like this. If you would like to contact me regarding anything in this video, feel free to email me at brucefleet, F-L-E-E-T, @gmail.com. With that said, what I would like to do today is just go over some of the research that goes into a stock selection. And then what I'll end with is once a stock is purchased and I send you some of these stock charts, I want to show you how to very quickly, in a matter of a minute or two, read them so you can see the rationale behind the purchase. So to begin, we start with about 8,000 to 10,000 stocks and do research on these stocks once a week. This comes out Friday night of every week. And just from very simple screens, is it trading over $15 a share? Because that's a minimum. Is it trading on a proper exchange? We will bring that down, that number down from 8,000 down to about 250. That number fluctuates between 225 and 300 stocks. And again, that's just a beginning filter. So Friday night of this week that just passed, we did this research and it came up with 225 stocks. So that's where I'm going to begin because it would be too complex to start at 8,000. Every weekend, what I do is I go through, in this case, the 225 stocks, and I do a quick review of, just to give you an idea, their industry rank. There are 195 different industries available to purchase. We rank them based on their strength relative to the S&P 500, and I try to stay in about the top 40 to 50 industry groups. So the first thing my eyes will go to is this industry group rank. The second thing is I will look at these ratings in here. And one of the most common questions I get is, do I focus on fundamental analysis or technical analysis? The answer is both. Fundamentals are a company's earnings and their management and their products. Those are fundamental to a company. I look at that, and many of these ratings, this is earnings per share. This is sales and margins on returns. So I look at a lot of fundamentals, and then I get down into technicals. But just to show you how this gets filtered down, even from 225 down to one or two stocks, is I want to be in about the top 40 industries. I would like my ratings to look good. To me, looking good is 90 or above. Sometimes I'll go 85 and above, depending on the rating. Advanced decline is this stock being accumulated by institutions, which is critically important. You've got to have the big institutions behind your stock pick or your stock will go nowhere. This is relative strength. How is the stock performing relative to the benchmark? And so on. So we look at a lot of this, and there are a lot of stocks that will come into this range and fit within the ratings parameters that I'm looking for. But then my eyes immediately go to this column, which is 50-day moving average volume in thousands. I try to not buy a stock that's not trading at least 500,000 shares a day. This stock here, 507,000 shares a day. This would be 1.1 million, 9.2 million. Here's a company, Alpha and Omega Semiconductors. I just picked this randomly, but let's say all of the ratings were just perfect. It fit within the industry and it was being accumulated, but it only trades 195,000 shares. I'm going to pass. So looking at this first stock, number one industry group is telecom fiber optics. All of its ratings are really good, and it's trading 1.6 million shares a day. This caught my attention, so I'll put a flag on it, and it's very easy. You just click and put a flag on or take a flag off. So I'll flag that stock, and you'll see why in a couple of minutes. So I go through 225, 250 stocks and look at all of their ratings and flag the ones that at least begin to meet most, if not all, of the criteria that I'm looking for. Now, let me sort by the flags. And again, stay with me. We're going to really narrow down on this, but I'm starting with 8,000. Now we're down to 225. Then we're flagging the companies that at least have gotten my interest because of whatever it is, their fundamentals. We haven't really looked at their technicals yet. The flags end here, and so on. So I've done this once a week. This research comes out Friday night. I do this on Saturday of every week, Saturday or Sunday of every week. So now I've gotten my list down from 250 to maybe 80 or 100 stocks. Now we start to go more towards technicals. And before I go to technicals, let me show you that this is one list that I use. This is the whole broad market. But then I also subscribe, or FCM subscribes, to Motley Fools. And I've got another list of their stocks. The ones that are flagged are the ones that are meeting at least beginning general type of information that I'm looking for. And then I also have a miscellaneous where I read about a stock. I read research all day, every day, and on the weekends. And I'm reading an article and a stock that I haven't heard of, like this one, comes up and it sounds like a very interesting company that's got some cool project or product coming to market. I'll just stick it in my miscellaneous list. There's no flag here because, first of all, the industry group has a C+. I really want B or better. It's got a terrible sales and margin. So it's on my list, but it's just not flagged. So there are a number of ways to get into different lists that I'm looking at. But let's go back to the main list, which is the 250 best companies, and then I flag the ones that I'm interested in. That's done once a week. Now let's go to daily. There's something called a pivot point, which I'm going to show you on a chart in just a minute. But a pivot point is an optimum place to make a purchase. This screen is looking at stocks that are within 5% of their pivot point. Here's the percentage. This one is 4.7%, 4%, 0.9% to its pivot point. This list changes intraday, changes during the day because stock prices are moving up and down. And this is a screen I'm on every day. And what happens is anything I flagged from anywhere else in my systems remain flagged in every single list I'm looking at. So these are all stocks that are near their pivot point. But the first thing I'm going to check is these stocks because I already know they look pretty good. There's something about them that gained my attention. And once I go into, like here's Stryker Corp. Let's open this up. So now we're into this pivot point. We know it's past the fundamental tests. And you see this dashed line? That's the pivot point for this particular stock. And that changes as the stock is moving. But what I want to see is this stock get up into that area. And you'll see that says pivot. This is a 5% margin also. So you want to buy very close to the beginning of the pivot. You don't want to buy too much after the pivot because it may be getting extended. But so during the day, I'm looking at all of these stocks that are right here, you can see, near their pivot point. On this screen, this was at the close of business Friday, there were 31. Sometimes there's 2, sometimes there's 10, usually not more than about 30. But I'll look at these stocks to find interesting characteristics. So since I pulled up Stryker Corp, here's its, you can see it's weekly. Here's its weekly chart. I'm looking for where it is compared to its pivot point. I'm also very cognizant of how's the volume doing. So for instance, this was a big volume day, and it was also a big up day. And actually, I'm looking at a week. I apologize. So what I want to see is when the stock is trading higher, is there volume behind it? Is there volume showing me that there is institutional activity behind the stock? That's critical. If a stock is moving towards its pivot, but there's not institutional levels of volume, I skip it. I'm not even interested in it. So that's another thing that I'm looking at. I have a screen, which I will explain to you in a minute, called FCM screen. I created it. And before I go through it, let me just show you that on this particular stock, because I'm thinking about buying it, It's only past 78% of my checklist. Too low. I'm not interested. It's got to be 85% or more before I'm interested. So I've got this stock that I've screened that is near its pivot point. And then I go into my characteristics that I'm looking for. This one didn't pass because it's a little bit too low. But let's say it was good. Let's say it was really good. Then what I'm going to do is I'm going to go to, I want to see 46% of the stock is owned by mutual funds. I like that. That's institutional. And this is really important too. 8% of this company is owned by its management. My minimum threshold is 2%. But 8% is really strong. But then what I'll look for is now I'm going to scan every mutual fund out there that's in my database, 615 mutual funds. And you may say, well, there's a lot more than that. Remember, there's not that many funds. There's maybe 1,000 funds. They have multiple share classes. That's what runs the number way up. So I've got 615 mutual funds happen to own this stock. But then I have in my system about 30 of the best growth funds flagged. These are just great long-term growth funds, and I want to see that at least 2 or more of the best of the mutual funds own it, and this is very good ownership of this stock. So even though it didn't pass my threshold for my screening system, it does pass the mutual funds, which is just another way to screen. So what I'm trying to show you is there's lots and lots. We just keep drilling down and drilling down and drilling down to try to find one stock to purchase. And it's got to pass an awful lot of screens before we'll get in there. And once we do, and I do that with all of the different lists, and then like I said, we start looking at the technical analysis and how many funds own it and is it passing. So the most strict of screening that I have built in the system is my screen. It's called the FCM screen. And if I click on that, the results will be down below. Only 4 stocks have passed that screen right now. And what you may notice is we own 3 of them already. In NVIDIA, we own Edwards Lifescience and NetEase. Align came up on my screen, which is a very, very hard screen to pass. So let's take a look at Align Technology. And now this is the chart for Align Technology. And first of all, I can see that the industry group has an A rating for its relative strength. Great. So the industry is good. The industry rank is in the top 40. I'm getting A's and 90 or above on all of my rankings. It trades 750,000 shares a day. Okay, I think we may have just found a potential. Now what we're going to do is we're going to go over here, and I'm going to say this is quarterly of earnings per share and sales. And I can see that their earnings are growing and their sales are growing on a quarterly basis. That's really good. This is annual earnings, and I can see that the estimates are strong and the consensus, those arrows mean the consensus on Wall Street is for higher earnings. That's good. Okay, so now I'm interested. I'm looking at this stock as a potential buy. I want to see how it's doing relative, to other stocks within its industry group. That's important. And it's doing well. They're all rated very well, but this stock that we're looking at has a rating of 97 on its earnings per share, which is much higher than anything else in its group. Good, because I want to buy the best in the group. Let's see what else we can look at to decide if we want to buy this stock. The up-down volume ratio is greater than 1. That means that on up days, there's more volume going into the company than on down days. I like to see about 1.3 or greater. 1.7 is fine. I'm looking at that. Again, we're just trying to decide, do we want to buy this particular stock? Management owns 2%. There's my threshold. That's fine. Return on equity is at 17%. That's my threshold, 17 or more, so that's good. Earnings stability, we want under 20. The lower, the better when it comes to this. This is a 10, so that's good, meaning their earnings are very consistent. They're not wild and all over the mark. It's got a 19% earnings per share growth rate, which is excellent. And then some of the other ratings that we looked at before. So, okay, I'm real interested in this. This is looking really, really good. Let's go over to, it passed 100% of the FCM screen. So that's good. Let's go to what funds own it. 57% of the stock is held by funds. I like that. That means there's institutional force behind it. I hope this is making sense. 435 mutual funds own it. And then of my flagged funds, there are 5 of the 30 that own it. There's about 30 flagged funds. Those are kind of the best of the best. My threshold is 2 or more. So everything looks really, really good with this stock. This is a stock that's very high up on my radar that I may want to purchase for you. Then I'm looking at pure technicals. Pure technicals are, this red line is the 50-period moving average. We're looking at weekly, so that means it's a 50-week or 200-day moving average. And the stock has been going sideways. It's been consolidating. Each bar is 1 week. It's been consolidating, and it looks like it's finding support at that 50-period moving average. Could be a buy point. If this week was up here and it was dramatically away from the 50-period, I might wait. It might be a little overextended, and we might wait for it to come back down. But this is looking good. Now I'm going to drill down into the daily, and let's see what's going on here. On Friday, it was a down day, which happens, obviously. But what I want to see is what kind of volume was behind that down day? Were there a lot of institutions selling? And the answer is no. On that day, the volume was down 44% from its average. On up days, this was an up day and this is an up day, what you will see is that was 80% higher volume. So that's just showing you that money is pumping in on up days, and it's really, the institutions aren't really selling much on the down days. So and the last thing I'll look at is when's its earnings. Its next earnings announcement is October 27th, which is fine. That's a month away. If it was October 1st, I wouldn't buy it today. It's too close to the earnings, too much risk. Earnings are always risky. So this is a stock that's very, very, very high up on my radar to potentially add to your portfolio. So what we've done so far is we've gone from 8,000 to about 250 to about 70 to about 4. These are on the FCM screen. So every day I'm looking at the FCM screen. Every day, all day, I'm looking at what stocks are near their pivot point. And every day I'm looking at what stocks are near in tight areas, like they have been consolidating and they may be ready to break out. And then, of course, we look at how's the market doing. Is the market in a confirmed uptrend? Is it moving sideways? That will help determine whether they're going to pull the trigger and make a purchase. Now, the reason I went through all of that is when I do purchase a stock, and let me go to my holdings reports. Bear with me 1 second here. Here are stocks that we currently own. For most of you listening, skip line 3 and 4. Those are for a socially responsible portfolio that I manage. So those are in just a few portfolios. The other ones, we own NetEase, we own Broadcom, we own Facebook, Edwards, and NVIDIA, and Align Technology may be another one that's going in. But we just purchased Edwards Life Sciences again. We added to it. And when I purchase a stock, what I've started to do is I've started to send you these reports. And what I want you to be able to read on these reports is let your eyes go up to, this is a weekly report. You can take a look at quarterly. It says it right there, quarterly earnings. This would be a snapshot of something that I would send to you. You could take a look at the up-down volume, 1.6. Remember, I want to see about 1.2, 1.3 or more. Management owns 2% of the company. Return on equity is 22. So I may, you would see this, and you could look at the industry. You could look at all of these numbers. I'll also send you a snapshot with my checklist opened, and you can see that this particular stock passed 100% of my checklist. My checklist is, just to give you an idea, earnings per share has to be greater than or equal to 85. Relative strength has to be greater than or equal to 80. Advanced decline has to be an A, B, or C. So you can go through. Management has to own greater than 1%. Current price has to be greater than 20. I'm not buying any stocks less than 20. and so on. So these are my criteria. So I'll send you a snapshot that'll look like this, and I want you to be able to read it. Here's my screening. You can go over here and look at very specifics that will be built into this screening. You can look down here to where Edwards Life Science is highlighted, and you can look at the different categories. Another screen that I'll send you is I will send you that fund ownership screen, and what that print will look like is this. So if you want, you can see that 51% of the stock is owned by funds. You can see the number of funds that own the stock by quarter, and what we like to see is that different funds are jumping on board. The number of funds is growing that own it, and what you can see down here is that 5 of the best funds out there also own. You can see that Fidelity Contra Fund, most of you know that. It's just been a great fund for decades. They own this stock. So now I have institutional ownership behind me. So I hope this helps. So when I send you these snapshots, if you see this open, just start to read what's highlighted, owners and funds. And you can see the owners and funds down here. Take a look at the checklist. I'll send that to you all the time. I'm also checking news and industries and sectors, and there's a lot of really good information on these. Volume is critical. Always a look at volume because that tells us what the institutions are doing. That's their footprint, and so on. So I hope this answers some questions about what I've been sending you. If I send something, well, I will send these charts to you whenever I purchase a company, but as you're looking through it, if you're saying, remind me, what does earnings stability mean again? Just shoot me an email. It's as simple as that. Or, hey, Bruce, why didn't you mention PE? I'll tell you right now, I'll give you that answer. I'm not interested in PE. PE to me is a completely irrelevant type of statistical analysis because some of the greatest stocks have PEs that are so high that PE-focused people won't buy it because they think it's overpriced. Well, those are the stocks that continue to go up. So that's why I pay no attention to PE. But if you have a question about anything in here, just shoot me an email and I can send that out to you very quickly. It's very simple. So I hope this helped you understand a couple of things, that we go through a lot of analysis to buy a stock. Does that mean we're always going to be right? No, unfortunately it doesn't, because the market changes every day. Does it give us a better than average chance of being right? Yes, it does. And let me show you another thing. I've sent this out to you once in a while. This is a scorecard. And what this is these are stocks that we currently own. And if you see EW, that's Edward Life Science, and you see multiple lines, that means we bought it more than once. We bought that stock on 8/29 and we bought it on 9/23. Facebook, we bought on 8/26, 9/6, and 9/7. So that's what that means. And if we go back to Edwards Life Science, we can see this particular purchase has outperformed, this is versus the S&P, has outperformed the S&P by 3.06% since our date of purchase. And you can see the second purchase, which we just made the other day, has outperformed the S&P by 0.22%. If you go to the first line, which is a combined purchase, combined, we've outperformed the S&P by 1.62%. So what you'll see in this column, obviously, Broadcom has underperformed the S&P. I'm interested in seeing how that performs over the next week or two, because that could be a potential sell. But most everything we've done has outperformed. And if you look at that portfolio of stocks and roll it up all together, it's outperformed the S&P by 4.82%. The bottom line is, the more work we do, and this is the adjustment we made. Remember, we had a difficult time with some of my other platforms, and we got beat up a little bit. And it was also because it was a sideways market. But I made some adjustments, and the adjustments have worked like a champ. The proof is in the pudding. The proof is we are outperforming the market. Any way you want to look at it, we're outperforming the market. Now, if the market goes down 10% and we're down 6%, that too means we've outperformed the market. So it's not always positive, but we want to outperform the market up or down, because when the market starts to break out into a new bull trend, we should make significantly more money than the stock market. So this is another chart that I send out to you from time to time. A couple folks have asked, can I include the ETFs and the mutual funds in this chart? I haven't figured out how to do that yet, but I am working on it. I do take all suggestions very seriously. Most I can get done. Some I just can't because of technology behind it. So that's really what I wanted to show you. There was one other thing that I won't go through, but when I'm analyzing the stocks, I also use another company called stockcharts.com, and I'm looking at how's the relative strength been performing recently, where is it relative to its 20-day line. This is its momentum chart. MACD stands for Moving Average Convergence Divergence. I want to, and this is a thumbnail sketch, I would like to see that black line cross back over. It hasn't yet, and again, this is that aligned technology we were looking at a few minutes ago. I want to see that black line go over that purple line. Actually, if we look in the thumbnail, no, it hasn't. It just kissed it. So I'll be waiting until that crosses over. This is good. This is the volume is picking up as the stock's moving up. And I look at what's called a scooter ranking, which is Stock Charts technical ranking. Love to see about 85 or more. It's an 86.8. So a lot of good things. So I use a lot of different pieces. I don't want to bore you tremendously with this, but that's how every week and every day we go from 8,000 stocks down to one or two stocks. And then weeks could go by where those one or two stocks that are the best of the best of the best on my list, we don't buy them because the market's not acting right. So that's the story with that. I hope that helped a little bit as I do send these charts out. You'll now have your eyes trained a little bit better into what to look for, the checklist, the fund ownership, the best funds, the earnings, and so on. And it's just so easy that if you have a question, shoot me an email and we'll go from there, and I will immediately respond and explain to you what that particular data point means. With that said, have a great rest of your weekend. Go Seahawks, go Dolphins, go Broncos, go. We've got clients all over the country, so different football teams we have to root for, but I'm a Seahawks fan, so I'll stick with my Seahawks. Have a great weekend and enjoy fall, and call me if you have any questions. Thanks. Bye-bye.